All right, good Thursday morning, everyone. We're on the floor of the New York Stock Exchange with Jim Cramer, as always, to talk about the markets. And Jim, will start with Morgan Stanley earnings. A pretty good quarter, earnings and revenue beat.
I thought it was one of those clean stories. Now the stock has moved. It's bigger market cap than Goldman. James Gorman a long time ago decided, okay, look, we're going to change the model. We're going to make it so it's really client wealth advisory. They're fabulous at it. I wish the stock would come in. I would tell people to buy it.
And as you said on Mad Money last night, JP Morgan, best of breed, but you have to pay up for it.
Yeah, I mean, one of the things that I've learned over time, and in all my books, a big theme is the best of breed is always worth it. I'll talk about it in our Action Alerts conference that we have after this, our call, but we sold a bank today because it had gotten pretty much as far as it could go. And that's something I can't say about JP Morgan, which is also an Action Alert name. I think it's not gotten nearly far because it's really selling at 14 times earnings. It's one of the great growth stocks of all time. It's just that we never thought about it growth being the period of because of the downturn. But remember, they, as well as Bank of America, did something that the founding fathers really never wanted to have, which is to have tremendous bank concentration. They all took advantage of the downturn at the times it really battered their stock. But JP Morgan's a national bank now, with about, it could have as close to a third of the share of the country, but it also is international. And remember the way the tax code was set up, and I don't mean to steal this from Action Alert people, but the way that the new tax code came up is that you can't deduct as much interest in the U.S. anymore when you borrow. It's cheaper to borrow overseas, and that's one of JP Morgan's principal businesses. It's going to help them. Also going to help Citi very much.
All right, well, look, we got
two Action Alerts names.
Yes, and look, we got through bank earnings season, so we'll see how the rest of the quarter plays out, and we'll continue to watch that yield curve.
I'm still focused on Goldman. I liked what Goldman did. I think when the selling window it abates pretty much at the end of the day, you're going to get a chance to buy Goldman Sachs at 10 times earnings. I never thought that would happen in my life. They bought back a huge amount of stock. Marty Chavez did a fantastic job in the quarter, just unvarnished, which is what we always want from a CFO. He's gotten quite good. He's one of my faves. And I think that if you read through it, you'll see that technology is the theme. He is a computer scientist from way back. And he is going to make Goldman to be the most technologically efficient of the big investment banks. Bank of America has a huge digitization business. But I like them both. But I think Goldman's the value now. 10 times earnings for a company that if there's any volatility in fixed income, or if you get more days like you had on Tuesday, you're going to wish you bought Goldman Sachs. I think it's a really interesting speculation. Never thought I'd say that. It's a value speculation.
Huh. All right, well, speaking of Goldman, at least their sell-side research, they upgraded Walmart, saying they're in control of their own destiny.
Right, now Walmart, remember, they bought Jet.com. That was a brilliant acquisition. Guys from nearby me in Jersey who set that up, and he's Mark Lurie's a legendarily nice guy, by the way. And I think that what they've done is they've got great e-commerce. They have got the buy online pickup, which people do like. We know that from Target. They already gave the wage boost to the employees. At the same time, yes, they did close some underperforming Sam's Clubs, but 9,000 workers, but they're trying to get them jobs, which I salute. And now they're in a position to be able to announce a very big dividend boost and also a very big buyback. And that has been the theme of this quarter, is you say the good things about what you're doing with workers and the country, Tim Cook, and then you do a bigger buyback and a big dividend increase, if you want to, with the repatriated assets. So this is the 1-2 punch that's driving this market right now.
And you were expecting this 1-2 punch for quite some time now.
Yeah, I mean, look, I've been pretty unabashed about the beast mode. The only issue, just so we clear, is that I'm really out there on beast mode because, as Larry Fink points out in his excellent conference call, people are still pretty much pessimistic on Wall Street. And I wrote about that a little bit on Real Money today in a piece that's up this morning. And I think that's a shame. People want to be in index funds, and I'm all in favor of that. That's good exposure to the market. But the fact is that more people are fascinated by Bitcoin. There was an interesting closing dinner I went to for something that TheStreet.com did. And it was at a very good Italian steakhouse. And I was not able to get to the restroom from where the dinner was without being stopped 3 times about Bitcoin. And I always come back when someone says Bitcoin, I always say Boeing.
Well, you said that to 2 millennials outside of Capitol Grill the other day.
Boeing is up $50 and they're down 8,000, 7,000. I don't know. I'd rather be up 50 than down 7,000, but that's just my predilection.
Dennis Malmberg.
Yeah, Malmberg's good.
Meanwhile, Morgan Stanley reiterating their overweight rating of Netflix, talking about content.
It's a very good report, and it really shows that the EBITDA is going to start flowing the bottom line. I mentioned this new movie, Bright, that a lot of people didn't like, but it sold 11 million viewers. 11 million viewers, that would amount to one of the top 10 box office successes. It's funny. They went and bought like entertainment properties. Well, they actually own this. They own a lot of the movie theaters that they're reconfiguring. I don't know if anyone's been to these ones where you can have dinner. They're really fabulous. But I'm just saying that the box office success of the new Netflix, even the ones that get bad reviews, rather amazing. This is a piece. This is about why we're still overweight. I really liked it because Swinburne is basically saying, listen, normally we would say take profits. It's up so much. This is something I wrestle with every day. They're saying, listen, this is such a special story for 2018, particularly international ads. Don't take profits. Really superb piece of research.
Oh, we should point out, the note did point out a potential risk from that Disney direct-to-consumer offering, but...
Yeah, look, the world's bigger than people realize. I mean, we can have Amazon movies and Google movies and Facebook movies and Google YouTube channels. It really doesn't matter. There's a lot of room. This is also multitasking. It's a stay-at-home economy. It matters.
Jim, who do you have coming up on Mad Money tonight?
Okay, there's a company I've liked very much, which is an acquisitive company, PPG. They tried to make, the last acquisition didn't go through, but they reported a spectacular quarter today. The paint stocks are good. People, one of the reasons why I always say don't just read the headlines. The headlines all said it was a miss and a revenue miss. But if you know the company, it was actually a very good quarter. I also have IBM. I have Martin Schroeder, Swan Song CFO. Remember, he's moving over to be a global sales head. That was the same path that Ginny Rometty took to becoming ultimately the CEO. I'm going to go up to Armonk to interview Martin. I think Martin's a straight shooter. A lot of people feel this is the beginning of the next turn in IBM because of blockchain, because of cloud, private cloud, and the strategic imperatives that they're working on. New mainframe article, very good in the New York Times today. Another upgrade today. Wedbush, the other day we had a double upgrade from sell to buy on IBM. I think IBM stock was substantially weakened by the fact that Warren Buffett was a seller. Now it has run so much that even if it's a spectacular quarter, I wouldn't be surprised if it's down. But this may be a good place to be for people who are looking for value.
Okay, that's tonight, 6 p.m. Eastern on CNBC. Jim, we haven't even scratched the surface. Many more stocks to talk about, but you have to join us on actionalertsplus.com.
A lot of people are joining us, and I think you should too.
We'll see you there.